It's Thursday, March 4th. This is The Street Live. I'm Catherine Ross, and I am joined, as always, by Jim Cramer. Jim, what are you watching in the markets?
They're just killing. They're taking all the froth out of the market, and they're doing it in a way that is very good. They're doing it in a way that typically, when you have interest rates not misbehaving, as they're not today, and you have the stocks down, that tends to be an opportunity to pick. At the same time, I recognize the volatility of this market is just horrendous. It could turn on a dime. But I do believe that when you see the give up, this is what the give up looks like. And I'm watching the give up as I talk. And that is the opportunity. Now, we have made a number of sales for Action Alert. And I do feel that there's still some sales to be made, but that there are things to buy too, because the froth has just been annihilated. Whether the froth be in SPACs or the froth be in the high multiple tech stocks, as I talk about in Real Money today. But it's compelling to see when you have this market go down so much, so quickly, in the Cathie Wood love affair, where everybody in the world thinks that she's the best, and she's been a great manager. That is when she's unchanged for the year. She's given up her gains. She's down 20%. I think it says a lot. Down 20%.
Jim, let's circle in.
You follow her, right?
Yes.
And what do you think?
And what do I think of the holdings that she currently has for ARK?
Will she come in and buy Tesla today? Tesla's under pressure. It's one of her favorite names.
I wouldn't be surprised if we hear that, although it would be very soon after she just made a big purchase in Tesla. So perhaps they'll let it breathe a little bit. But I mean, down 2%. I want to get to Tesla in a minute, Jim, but it is interesting here, especially after the Barron news that you were tweeting about this morning. So again, I want to get to that in a minute, but you mentioned your Real Money column.
I got to stay focused on her because, does she give up? Does she give up everything? And, this year, that is a very big thing that she's given up everything. And I think that there are a lot of people who are deeply focused on her and what she's going to do. And I myself am watching, and I won't know until after 6, obviously, but it's very important.
I completely agree, and that is Cathie Wood is a topic, and ARK is a topic that we will continue to hit on here on The Street Live.
Have to.
Now, Jim,
we don't talk about it enough. The things that I'm thinking we don't talk about enough. We don't talk about what she's doing because now that she's given up those gains. We don't talk about this David Portnoy buzz, algorithmic ETF. That I find to be so interesting. We've got a couple videos about that. We don't talk enough about how Snowflake reported an amazing quarter. And the way you look at Snowflake is you have to look at the RPO. Okay, that is the deferred revenue. That's a deferred revenue story, and the deferred revenue was fantastic. Or Splunk, which I have on tonight, and Splunk did a great job. They pulled it out of the fire. But you know what? People don't care, and that's what I'm focused on. Is what is going to make people say, you know what? Enough is enough with the NASDAQ. And we do not have that yet. But I do think that it's coming.
Speaking of snow, that was a stock that you mentioned in your Real Money column this morning. Now, Jim, you specifically wrote, and I want to quote you here, bad news may mean that everything growth is worth less than we thought.
Well, I think, remember, what I'm saying is that growth does not, we pay less for growth when we see interest rates go higher. Interest rates are 50 basis points higher now on a basis of 7 or 8, the 8 where the 10 years spent most of my time. Then no, it doesn't matter. But when you're talking about this very low basis, 50 basis points means a lot to people. Not to me, but it means a lot to the people who historically buy high growth stocks. And the thing that's incredible about the high growth stocks is you cannot trust your fellow shareholders. Many of them do not know what they own. Many of them couldn't tell you what Fiverr does. Fiverr had a follow-on offering that was canceled today, which is usually a very good sign when they can't sell stock. People don't know what Twilio does. They think they know, but they kind of they know it goes up. And there's a considerable number of people, let's not forget, who believe that all stocks do is go up, and they were encouraged by the cruise lines, which turned out to be exactly right. So we're at this very moment at the cusp of, does this market hold, or does it just completely give up the ghost? And I don't know. I do know that if interest rates stay tame and everyone keeps selling stock, well, you're going to feel that was a mistake.
So you and Mad Money last night said that the selling of previously beloved stocks won't stop until interest rates take a breather, as you just noted,
Right.
and you advise patience. Now, Jim, I want to get some names out of you. What are some tech stock names that are heading lower that investors can sort of add to their bullpens?
Well, let's see. We want to be which tech? Well, we're looking at AMD as a level, and I'm saying, I'm going to tell the guys it's got to go lower. Go lower still. We need something. We need something to buy tech. This is real time what I'm doing. That'll help our basis. Because I look at this and say, all right, when Cathie Wood is down 20%, and I'm using her as the barometer, you got to find something to buy. Now, we're not oversold enough for me to just say you must buy. I am saying you got to be looking to buy. And that is not how I've approached this market, because I believe this market is a carbon copy of December 2015 to February 2016, where you had the pressure on the Fed to move. The Fed did move. I don't know what Jay Powell's going to say, but eventually he may feel like he has to move if the pandemic's ending. And then you're going to have a big give up in the high growth, and that's not this give up yet. And that's when you buy. The give up of the February period of 2016 was between 30 and 40% for the best. Now, we're not there yet. There are some stocks, though, that are down 20, 30%, but they were so hot that I don't know. They still may be up for the year. I don't think that you want to buy a stock right yet that is not down 30% or that is still up for the year, because that may mean that there's too much froth in it. That's kind of the thing I'm dealing with. I'm trying to form this worldview. It's not the topic of the talk today, but I am trying to say, okay, here is what we're looking for, and I might be able to do that in the Q&A part of our show,
which will be live on actionalertsplus.com at 11:30. Now, Jim, you do mention in a tweet, and I want to read this out because perhaps when they're watching this, or our viewers perhaps haven't checked in on your Twitter this morning, but you say cheap stocks, Google, Facebook, and Apple. Now, are these three that haven't come down just enough for you, or?
Well, you back out the cash, and you look at how these companies are doing, and they're valued far less than a Cummins or a Caterpillar, Ingersoll Rand, Parker Hannifin, and Emerson, Eaton. These are great growth companies, and the froth has just been crushed in them. And I look at Google and I think, okay, what's happened to Google? Well, the Google Cloud Services has really come on because of Thomas Kurian. Google is the ultimate travel stock, because when airlines want to be able to get customers, they go and give money to Google. The Google search function is doing amazingly well. Google has a couple of divisions that it doesn't need if it doesn't want to. And I'm looking at this stock and saying, how does anybody think there's froth there? There's froth in the parts of the market that I detail in today's Real Money piece, which is companies that are playing the relative game. You say, well, if Pinterest is worth X, then Twitter's got to be worth 2X, whatever. That's what I'm looking at. And then I'm obviously watching things like Okta, because Okta buys a company that does consumer. That's what I've been trying to pressure Todd McKinnon to do. And I like Todd very much. He pays for it with $6 billion in stock. So some people immediately say, wait a second. If he's buying it with stock, he must think the stock is overvalued. So I don't know. I'll speak to him and make a judgment. But that's kind of what is, and Okta's really at the core of what's happening today, Okta and Snowflake. Snowflake had an amazing quarter. Stock should be up. And we've got terrific numbers, a terrific acquisition by Okta, but because they're doing it by stock, maybe people feel like he has so much cash, why isn't he do it by cash? So we don't know.
Jim, I want to turn our attention back to Tesla. Now, you mentioned it when we were talking about Cathie Wood earlier in the show, but Ron Barron's firm sold 1.8 million Tesla shares, and you were tweeting about this morning. Would you, at this level, I'm looking at Tesla right now, it's down about 1.5% to $643 a share. Buy, sell, or hold Tesla at this level?
Well, I would buy Tesla. I know Tesla is rolling over. Ron Barron was doing portfolio management. Now, that's a concept that is lost on a lot of people because they're not portfolio managers. But I was a portfolio manager. I am a portfolio manager. And But for instance, right now, 4 to 6% of our fund of the travel trust. And we're uncomfortable with that. We think, wow, maybe we're too much Ford. So you can imagine the pressure that he must feel being too much Tesla. I mean, the stock is just, his company is dependent on Tesla. So I look at what he's doing, and I think that's very smart. But I also said on Twitter that people will not see it that way. They'll see it as a that he's a turncoat, that he's a trader to the Tesla cause. And I look at it and think, please do not feel that. He is doing the right thing. But, you know, stock's down because of him, and also because the NASDAQ is so bad. And you're going to need a Cathie Wood to come in. And she does like the stock. It's how she actually made her money, was with Tesla. She can come in, and she's put bottoms in before. She put a bottom in Snap. I've seen her put a bottom in Palantir. There's many stocks that she's put a bottom in. It's time for her to put a bottom in Tesla.
Now, Jim, when we talk about Cathie Wood, a lot of the audience and the popularity that she's gained is due to Wall Street Bets. So I want to talk to you about the newest Wall Street Bets focus, which is TANGER. Now, it's a very heavy short interest stock. Now, if investors are looking for a real estate investment trust play, is this a stock to eye when it starts to cool down?
No, but I mean, it shouldn't be shorted. I mean, I like Federal Realty and I like Simon Properties. Those are better. Federal Realty is the largest shopping center company, and it did not cut its dividend. And you can go buy a lot of that and get a nice yield. Simon Properties is the largest mall company. I think it's a fantastic deal. They bought Taubman. The stock's up a lot since I said buy it, so I want to be cautious there. But those, you know, that's what you buy. You don't, I mean, you gotta buy high quality. Now, is Steve Tanger's now executive chairman? Is it a good thing to go buy a stock that's just like quadrupled? No. But what happened is that they did well. They did better than we thought. I mean, they've gotten better and better when it comes to payments by the retailers, but they are not. They're 90% occupancy, and they need to be higher. But you can't short it on that. I mean, this is another one of those where I see that it's shorted, and I say, like, why? Like, what? You know, why is Bed Bath so heavily shorted? GameStop I get, although of course it was too heavily shorted. Because it exceeded the amount of, we know that it exceeded the amount of stock that was actually out there. But some of these companies that are shorted, like why was Rocket so heavily shorted? What, because rates might go up, or people like short Rocket and long JP Morgan? I don't know. But there is absolutely no particular reason why you should short Tanger Factory Outlet right here. None. There's no reason. And the fact that it is being shorted makes it ripe for the kind of incredible, let's just say, destruction that Wall Street Bets can cause. And I am totally respectful of what Wall Street Bets does when they have a lot of people. I think people have to recognize this is just a huge number of people. They attacked me the other day. They had a little funny thing about me. And they used Mad Money, which you can't, it's copyrighted, but you can't. I was surprised they attacked me. I've been a supporter, and you can't attack the supporters, but they sure did. They really went after me. They went after me lock, stock, and barrel.
Jim, I'm looking at, so our colleague over at TheStreet, Corey Goldman, sent me this website this morning. It's called highshortinterest.com. I'm looking at their top high shorted interest stocks.
Rip them down.
So
we'll do a lightning round.
GameStop is 41% still, according to the site.
Yep. Well, remember, we need Ryan Cohen to use the 5,000 stores to become the best place to buy GPU cards, like the ones that NVIDIA are coming out, in order to crypto mine. They should just turn into a crypto mining store to tell you how to crypto mine, and then do a tie-in with Square and make it so that they are the place to learn about crypto. And then you do it with the Cash App from Square, buy a little bit, and that's fantastic.
Okay, and then we've got Tanger, which we've just talked about, 39% short interest.
That's a good one. I mean, that's what I want Ryan to do.
Jim, our third high short interest stock is Academy Sports and Outdoors with 37%, Which is kind of interesting to me because you'd think that people are buying more sports equipment to play outside.
Yeah, that's stupid. I mean, but I got to check the balance sheet. Maybe they have something on the balance sheet.
Perhaps. And then, of course, we've talked about rocket companies, and that is the fourth high short interest stock.
Oh, it's just, you take these guys. I mean, look, I've had my go-rounds with them. I mean, I once said, what kind of loan losses do they have? And they're much better than Wells. Wells have been the number 2 lender. They were number 1. Much, much better. I mean, they're just a good lender. And the housing market's red hot. It's the hottest it's ever been. You want to be a lender. And even though rates ticked up, there was no cessation in the home buying. So that was a very ill-advised short. Very ill-advised.
And Jim, we mentioned Okta earlier, and I want to talk a little bit more about this acquisition. For those of you unaware, they announced that they are buying Auth0 for $6.5 billion. I apologize if that's not how you say the company's name, but that is how I assume it is said. Investors were less than pleased, but you like this. You said that you like this acquisition.
Well,
why?
Here's what goes on behind the scenes. I'm going to give you a little behind the scenes that happen. That happens with me. I like Okta, but it's a enterprise model. In other words, you don't get that identity where they can identify that you're not. If someone's posing you, they'll get it. I mean, they have like the passport. You are the passport. And what I see is that a lot of people want this thing. Customers want it. Consumers want it, and you can't get it. So I pushed him over and over again, please do something that we can get. And what's happened is he finally did it. And so now that he finally did it, I can't say, hey, I don't want you to do it. Did he pay a lot? I don't know. It's private. We don't know enough. But Okta, Kramer family favorite, we need more information before. Now, when I say we need more information, that does not mean I'm stupid. It means that we don't know enough. And I think that I will know enough by tomorrow, I can tell you. But the idea that Okta moved into the consumer space is very positive if you're a consumer, because Okta's the best there is.
Another stock that you've liked is Disney. Disney now plans to close around 60 of its Disney stores in order to focus more on e-commerce. Now, I want to look not only at this specific company, but other companies as well. Jim, how big can e-commerce be as a play after the world starts fully reopening?
Well, look, I think that there's a kind of a canard going on here, which is that when we reopen, we're going to go start shopping. Now, the mall stocks, American, some of these stocks are doing AEO, the Aerie is doing quite well. The mall stocks have gone up a lot. L Brands has gone up a lot because of Bath and Body. But I will say this. You cannot underestimate the convenience factor of having things delivered. And people have been spoiled. They know when it comes, it's just easier to go. I mean, one of the reasons why we sold CVS, okay, was that there isn't anything at CVS that you can't get on Amazon for cheaper. But you don't have to carry it. You don't have to go to a car, get it. You don't have to wait in line. You don't have to go to that silly checkout thing where they scan. So it's just a terrific way to buy things. And I think that gives you more time to have fun. And when the pandemic's over, we're going to have fun. So it's not like we're going to sit there and say, you know what, we're going to have fun. We're going to go to CVS. We're going to go to Amazon. So I know Amazon's going to take a hit. I mean, we all know it. So then the question is, can you sell Amazon and then buy it back? Can you miss that? Can you dodge that decline? And I think that's hard. And so we can't do it for the club. It's just too hard. That's all I have to say. Can't do it. Too hard.
Jim, speaking of the club, your mad dash was Marvell, and since you have your members only call at 11:30 this morning over on ActionAlertsPlus.com, I wanted to use this opportunity to talk about your note on the earnings last night. Now, Jeff Marks and Zev Fema have been working tirelessly. They're both analysts over on Action Alerts Plus, and they wrote, it's a bit disappointing to hear that Marvell anticipates a supply challenge for 4 more quarters. Is this a chance to buy Marvell in your eyes?
No, we sold it yesterday. We sold Marvell. We can't buy it back. It was right to sell. We still have some. It's not down enough. We bought a lot between 16 and 20. Should we have sold in the 50s? Obviously, it's silly. Yes, of course. But what I think is important is that you got to let this one come down because it's going to impact our basis. Obviously, we buy here, but in a negative way. But it's not down nearly enough because what they basically said was, listen, we can't make the numbers for the rest of the year, and there are going to be people grow impatient, and there'll come a level where it's fine. But I'm very proud that we sold the stock before, sold such a huge amount before the quarter, because what we were saying was we don't trust the quarter, and we were right.
Yeah, and you specifically, you guys trimmed the stock, correct? So you still like.
We took off a lot.
I'm sorry, can you repeat that? I didn't hear you.
We took off a lot. A lot.
Yes, you did. You sold off quite a bit of your position.
Right.
Yeah, but I'm asking because I know that you and I have talked extensively about how this is a 5G play. Now, even with the expectation that for the rest of the year, this stock is not going to meet the expectations of Wall Street, Jim, do you think that if an investor is eyeing this stock here and just wants to start a tiny position, is that worth it, or do they really need to wait?
No. I mean, we sell it with the idea that it's going to have a considerable decline because we don't like to sell a company that we've been very, very right on. But I mean, I don't know, in the 30s, like the mid 30s, maybe it will be fully discounted. I think there's a lot of portfolio managers who are scratching their head saying, wow, I didn't know this thing was that hostage. And that's the problem.
Yep, I'm right with you, Jim. That's why I wanted to hit on this specific stock, because I know that it is one of our fan favorites. So with that, Jim, I want to let you go early today because you do have your Action Alerts Plus Daily Rundown members only show at 11:30 this morning, which will be live, and you have to prepare because we're still seeing tech under pressure this morning.
Oh, yeah, and we cover it, and we'll be ready. You're not going to get a bottom until rates do not go higher, and we have a capitulation, and I talk about that, what a bottom would look like on the conference call.
All right. With that, thank you for joining, and thank you for tuning in, y'all. I'm Catherine Ross, and we'll see you tomorrow.